Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 1578A and today's date is May 28th, 2018 and the title of the episode is We Are Looking in the Wrong Direction. The Collapse is This Way. Now, before I get started, I just want to make a couple of announcements. I just want to wish everyone who is celebrating Memorial Day, happy Memorial Day. I also want everyone to know that I placed 2 interviews on the X22 Report Spotlight YouTube channel. The first one is with Bill Holter, and the second one is with Rob Kirby. And if you go over to YouTube and you type in X22 Report Spotlight, it will bring you to those interviews. Or you can come over to the X22Report.com or NewSentinel.com websites, scroll down a little bit, look over to your right-hand side. You can play the interviews right on the sites. Or you can go to Steemit, that is steemit.com/@X22Report, and you can play the interviews right on Steemit. Let's get into the economic collapse financial news. Now, we've been talking a lot about cryptocurrency, and there's a lot of people out there that believe that the central banks created the cryptocurrency market and they're going to use it to trap all of us. And one thing that doesn't make sense is if that is the case, then why demonize it? Why go ahead and tell everyone that cryptocurrency is not really currency? Why go ahead and tell people that fiat or fiat is the only real currency? Why do all of this? Now, let's say the central bankers did create cryptocurrency. They're demonizing it just like gold and silver. Did they create gold and silver? No. Why do they demonize it? Why do they suppress it? Why do they tell people don't invest in it? Why is the St. Louis Fed out there saying that Bitcoin is only worth $1,800? Why are they trying to dictate the price? Well, it's because they don't want anyone to use a blockchain system. They don't want anyone to use a blockchain system that they don't control. That's their biggest fear. Now, let's say they did create the cryptocurrency market. And we're all moving into the cryptocurrency market, just like we're in the fiat currency system. Well, if that is the case, you have no choice then, do you? You're going to have to use cryptocurrencies, just like you're using fiat currencies. It makes no difference, does it? And you're going to have to understand it. You're going to have to learn it. And this is why I'm talking about the X22ReportSchool.com. Now, people are saying, well, you want us to go there and you want us to sign up, but it costs money. Of course it costs money. Well, Dave, do you get anything from it? Of course I do. I mean, I don't have a Patreon account. I don't ask for money. Yes, I have a donation button on the website, but I'm not asking anyone for anything unless I give something back to you. If you want to learn, people have put time in, created videos, people are doing the research, and people are doing the work to show you what to do. That's worth something. It's not a bad thing in this world to make money. It's a bad thing when the central banks try to profit and enslave the people. You do have a choice. You can either go to the school or not go to the school. You can either invest in cryptocurrencies or not invest in cryptocurrencies. You can invest in gold. You can invest in the fiat dollar. You can invest in the stock market. It's all up to you. You have all of these choices. In my opinion, I believe cryptocurrencies, the blockchain system, is separate and apart from the central banking system. They're demonizing it just like gold and silver. There's a reason they're doing it. Now, there might be a place in time where they decide they're going to take control of it. It's going to be very difficult because they would have to have every country around the world controlled like they are doing it right now. And I think during this period of time that we're in right now, I think it's going to be very, very difficult. And I think it's going to be hard for them to control a decentralized platform. Yes, will they try to make it centralized? Will they try to control it in one point, in one location? Yes, they will try to do that. Central banks are notorious for doing that. They've done it with all the paper currencies. They've done it with gold and silver. They've done it with everything they touched. That's the problem with the central banks. They take systems that are good, that are people run, and they centralize it into their system to control it. And we're at the point in time where people are going to have to make a decision. And this is why I keep saying that we need to remove the central bank from the system. No matter what, we're going to be going to an electronic payment system, one way or another. It's either going to be the central bank's electronic payment system, or it's going to be the people's electronic payment system. I would like it to be the electronic payment system of the people, where there are no central banks whatsoever. And yes, there is a little bit of a learning curve. Yes, right now we're in the phase where cryptocurrencies are bobbing up and down. People are getting nervous, and a lot of people don't understand cryptocurrency. This is why I joined up with CryptoZ, Crypto Cowboy V, to help people learn about cryptocurrencies. People have been emailing me like crazy, so I said, all right, let me join up. And we have been helping them. Now, the first interview that I did with CryptoZ, Crypto Cowboy, and the rest, we discussed everything about what the school was about the trading room, and what you can expect. Now, there are many people in the trading room. There are many people that are making money. There are many people that are learning about it. There are many people that are doing all different things that they've never dreamed that they'd be able to do with cryptocurrency. And they give you the choice of basically taking what you've earned and cashing out in gold and having the gold delivered to you. So right now, there are many countries out there, and they are looking at the crypto market, the blockchain system, which is completely decentralized. I know people keep telling me it's centralized. It's decentralized around the world. And we see already that Russia, Iran, China, they're looking into the cryptocurrency. Actually, the Iranian MP chairing the Commission for Economic Affairs, he suggested that Iran and Russia could use cryptocurrencies to overcome sanctions and use it to replace the SWIFT interbank payment system to execute international bank transfers. This is going to be the next phase. Now, the biggest question that we have is, are central banks going to control it? Hopefully not. But no matter what, if the central banks, let's say they do control it, you have to understand it. You have to know how it works. If they don't control it, you still have to understand what it is and how it works, because you need to understand what it does. And you can see there's a battle going on right now. There's a huge battle. And this is going to continue on. And I see the central banks continually demonizing the blockchain crypto market, the same way they're doing precious metals and with gold and silver, where they're continually demonizing it and suppressing the prices. They're doing the same exact thing. But I'm hoping around the world, and the people, they all come together. They all look at the situation and say, you know something? This is a system that can be used without the central banking system. We don't need them anymore. We don't need the banks anymore. We don't need any of this anymore. We can control this on our own. It's almost like we started up our own fiat system, and we decided to create our own currency right now. Now, that would be outside the central banking system, because we, the people, were creating it. Now, can the central banks take it over? Well, they did back in 1913. We, the people, were creating our own currency, and the central bank, they bribed, they got their foot in the door, and they were able to take over the entire system. This might happen with cryptocurrencies, but we don't know that as of yet. But we as the people should fight against this. Now, we've been talking about the economy and how it's completely breaking down, and we see that the Fed is continually raising interest rates. They're saying maybe we'll do one more. They said they were going to do 3 to 4 during this year. And we could see that the economy is starting to break down now, and certain things are starting to completely implode, like real estate. We're seeing student loans are slowing. We're seeing automobile loans are slowing. But we need to start paying attention to the Libor rate. And I discussed this with Rob Kirby and Bill Holter. And we continually see the Libor rate continually moving up, up, and up. And Libor stands for the London Interbank Offered Rate. And it is extremely an important rate. When investors borrow money and use their portfolio as collateral, the loan is often priced at Libor plus some base interest rate. For example, the loan might be priced at Libor plus 1%. Importantly, these loans are not priced based on the federal funds rate. Nearly every day it is getting more and more expensive to maintain these lines of credit that the wealthy investors have been using. And we can see that there's a lot of credit out there borrowed against stock portfolios. It's trillions of dollars. People with portfolios of liquid assets, people who own stocks, have access to these credit lines. Often they must have more than $1 million in stocks and bonds to gain access to the Libor plus loans. These are the 1%ers. They can buy a new house or finance a large purchase of liquid assets by using their portfolio as collateral. These assets might be boats, planes, fine wine, art, you name it. The problem is the banks don't ask you what you're going to use the money for. The only stipulation is that it can't be used to buy more stocks. Anything else is completely fair game. However, there's a problem. As interest rates continually move up and more portfolios have been used to finance asset purchases, a huge storm can be created if stocks and bonds take a small dip. Because if stock prices slide, the borrower could get margin calls. They have to sell stocks. But they also have to reduce their leverage because they can only borrow so much against the portfolio. Then what happens is everything starts to unravel. And all of a sudden selling is accelerated. More people start to sell their stocks. And all of a sudden the stock market completely implodes. This is why they're keeping the stock market up. They don't want this to happen. Now we have trillions of dollars out there, and things could get nasty. And this is why we're looking at the Libor rate, and we're looking at all of this right now. So what do we know? We know that investors, they have taken on massive amount of margin debt. When this margin debt is unwound, like it was during the last two bear market, it's going to be nastier than before because there is so much speculation in the system. And if we look back in history, we are in bubble territory. We have years of low interest rates. They have manipulated the stock market higher and created an imbalance that is disproportionate relative to the general economy. When the market does get hit with another crisis or a bear market, it's going to be more painful than normal given its relative size to the economy. And this is because of these individuals taking these low interest rates, loans, using it, and they've been buying other things. And when the stock market starts to slide, the margin calls come in, and it's basically game over. This is what we're going to see. And this is why we need to look at the Libor rate and not the Fed rate. Yes, the Fed rate is important, but the Libor rate is moving higher every single day. And we can see there's many banks which are exposed, especially in Europe, especially in Italy, actually. And there was a study by the Bank of International Settlements. They've shown Italian government debt represents nearly 20% of Italian bank assets and one of the highest levels in the world. And there are about 10 banks with Italian sovereign debt holdings that represent over 100% of their Tier 1 capital. And this includes Unicredit, San Paolo. We see also Monte del Paschi, Banco PM, and there are many others. Now, let's put this into perspective on what's really going on here. Remember, the ECB, the Fed, Bank of Japan, they've been pumping in trillions of dollars with their QE programs. And we know that these QE programs on the surface, they're going to be coming to an end. And what this is going to do, it's going to create something called the doom loop. And this doom loop, well, it's going to affect these banks. Now, the doom loop is when weakening government bonds threaten to topple the banks that own the bonds. And in turn, the banks start offloading them, which causes these bonds to fall further, thus pushing the government to the brink. The doom loop is a particular problem in the Eurozone since a member state doesn't control its own currency and cannot print itself out of trouble, which leaves it exposed to credit risk. But it's not just the Italian banks that are in trouble. There are many other banks that are hooked into these Italian banks. I mean, we're looking at French lenders, we're looking at Spanish banks, we're looking at many other banks, even U.S. banks. So when this thing starts to fall, it's going to be like a domino effect. It's going to hit every single one of these banks. And we can see right now we're getting to that point. Actually, if you look at the credit cycle and you start to look at what has been happening, and this is another indicator to show us that we're heading down the same exact path. We hit the credit cycle peak in almost every single recession. Back in the 90s, we hit it at 43%. In 2001, we hit it at like 44.5%. In 2008, 2009, we hit it at 45%. And right now, we're just barely above 45%. We just hit the credit cycle peak, which tells us every time we hit this, we end up in a recession. And here we are once again at that credit cycle peak. And Bill Holter has discussed this many, many times, where he says that credit is going to freeze up. Because once we hit this credit cycle peak, it comes down like a rock falling from the cliff. It goes straight down. And once it comes down, credit freezes up, and basically pensions are doomed, deliveries are doomed, loans going to the people, to buildings, to everything else is frozen. Automobile loans are frozen. Everything just freezes up because we are a credit-based society. And we are at that point once again. And if you look at all the indicators, they are pointing to one thing, and one thing only right now. We're pointing to a recession / depression / collapse scenario. Now, let's look at some of these bad things that are heading our way. One, the smart money is getting out of stocks at a rate that we haven't seen since just before the crisis of 2008. Moody's is warning that a particularly large wave of junk bond defaults is coming. According to the FDIC, a closely watched category known as asset of problem banks more than tripled during the first quarter of 2018, which means that some really big banks are now officially in problem territory. U.S. Treasury bonds are having the worst start to a year since the Great Depression. Mortgage interest rates just hit a 7-year high, and they've been rising at the fastest pace in nearly 50 years. This is going to be a disaster for real estate. Retail industry debt defaults have hit a record high in 2018. We are on pace for the worst year for retail store closings ever. The two largest economies in the entire globe are on the verge of starting an international trade war. The 9th largest economy in the world, Italy, well, guess what? They're in the midst of a financial meltdown. We know that their banks are in trouble. It's a complete and utter disaster. German banking giant Deutsche Bank just announced that it'll be cutting another 7,000 to 10,000 jobs. I think it's going to be a lot more. And I think it's going to spread to other banks. I think we're at another Lehman situation. So what we're seeing right now is the entire system is breaking down, and it's breaking down rapidly. And as the system breaks down, we're going to enter a transitional phase. Every country goes through the transitional phase. They move to a new currency. And the question is, what is this currency going to be? Now, we know the blockchain was born. We know there's a fiat currency system in place right now. The central banks would like their system to be centralized, either fiat or blockchain, whatever they can get control over, whatever they can convince governments of. And we, the people, need to make a choice. Are we going to have another fiat system where the central banks control it? Are we going to have a cryptocurrency blockchain system that the central bank controls? Or are we going to move away from that? Remember, each system is a good system. The system that is backed by gold or backed by silver, it's a good system. Checks and balances. You're issuing the paper currency to each of the gold bars that you have. Everything's in checks and balances, and you can't issue more than you have. Same thing with cryptocurrency. Bitcoin, there's only a certain number of coins that you can produce. Most of the other cryptocurrencies, the same thing. You can only produce a certain number of coins. Now, when the central bankers get involved, what do? Well, in a fiat system, they take us off the gold standard and they create as much currency as they want. If they take control of the cryptocurrency, guess what? They'll just create as many coins as they want. So what is the problem here? The problem, again, is the central bank. The systems are fine. It's when the central bank gets involved. And it's not just they just create fiat currency. It's not just that they'll create crypto coins, is that they'll attach interest to it and then loan it to the government. Then the government has to figure out a way on how they're going to collect the interest from the people. That turns into taxes. And then they start taxing you, which enslaves you. And you can never pay off what the central bank loans you. It doesn't work. They loan you $1, they want $1.50 back. Where do you get the half a dollar? Well, you got to borrow more. Same thing with cryptocurrencies. If they create a coin and they loan it to the government and they add interest to it, it's $1.50. Where do you get the other coin? Well, you got to go back and borrow it from the central bank. The central bank is the main problem. These systems are fine. Actually, the blockchain system is even better than the fiat system because it's a truth machine. It's a ledger. You know what everyone's doing. Think about it today. We have the central bank system. There's $21 trillion missing. No one knows where it is. Nobody can even figure it out. The cash that's being transported by these huge pallets on planes, where do they go? Nobody knows. You can't trace them. So the blockchain system is a truth machine. You can see the transactions. You won't be able to see the people's names or their addresses or anything like that, but you could see where the funds have gone. And it keeps track. You can go back in time. You can find out all this information. Now, if someone tried to go and, do something to one of the servers, well, remember, it's decentralized. You just can't hit one server and hack it. Yes, you hear hacking on exchanges today because those aren't decentralized as of yet, but they're coming very, very soon, and the exchanges will then be decentralized. So we see right now that all of these systems are great. The main problem that we have, well, it's the central bank. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.